Gold's price moved lower over the past week after forming a new all-time high. Today we are to discuss the fundamental challenges laid ahead for the precious metal, the negative correlation of the dollar with gold, the recent movement of US yields, as well as upcoming financial releases that may affect the direction of gold's price action, and the recent survey by the WGC. Finally, we'll be concluding this report with a technical analysis of gold's daily chart. We make a start with the slight strengthening of the dollar against its counterparts since our last report, which in turn weighed on gold's price. The negative correlation of gold to the dollar continued on Monday, with the dollar strengthening while gold's price moved lower. We expect the negative correlation between the dollar and gold to be maintained, in which case, should the dollar gain further ground against its other currencies, we may see gold's price moving lower. We also note that since our last report, the yields of US bonds reversed course and moved higher. The rise of US yields applies to short-term as well as long-term bonds. It should be noted that the attractiveness of US bonds as safe haven instruments increased as the rise of US yields increased the compensation for the individual investor, while at the same time tends to decrease the attractiveness of the precious metal, which is a non-interest bearing. Should US yields continue to rise in the coming week, we may see investments being diverted from gold towards US bonds, thus providing some bearish tendencies for gold's price. We highlight the US core PCE rates for June, which are set to be released this Friday. The US core PCE rates are the Fed's February tool for measuring inflationary pressures in the US economy. The current expectations by economists are for the core PCE rate for June to come in at 2.5%, which would be lower than the prior rate of 2.6%. Thus, should the rate come in as expected, it may imply that inflationary pressures in the US economy are easing. In turn, easing inflationary pressures may increase pressure on Fed to ease their restrictive monetary policy stance, which could weigh on the greenback. Therefore, given the inverse relationship between the dollar and gold, it could provide support for gold's price. On the flip side, should the core PCE rates unexpectedly rise, implying persistent or even an acceleration of inflationary pressures in the US economy, it may have the opposite effect, with the dollar strengthening while weighing on gold's price. In the coming week, we would like to highlight the Fed's interest rate decision, which is set to occur on the 31st of July, in which the majority of market participants are anticipating the Fed to remain on hold, with FFF currently implying a 97.5% probability for such a scenario to materialize. Gold's price appears to be moving in an upwards fashion despite its recent drop from its all-time high near the 2,470 level. We opt for a bullish outlook for the commodity, and supporting our case is the upwards moving trend line, which was incepted on the 27th of June. However, our RSI indicator below our chart currently registers a figure near 50, implying a neutral market sentiment. Nonetheless, for our bullish outlook to continue, we would require a clear break above the 2,420 resistance line, with the next possible target for the bulls being the 2,470 resistance ceiling. On the flip side, for a neutral outlook, we would require the precious metals price to remain confined between the 2,385 support level and the 2,420 resistance line. Yet, given the close proximity of the aforementioned support and resistance levels, should the precious metals price from a clear break below the 2,385 support line, we would immediately switch our bullish outlook in favor of a bearish one, with the next possible target for the bears being the 2,330 support base. Those were the top financial stories for this hour. From all of us here at Iron Effect,